So I will say hello everyone again and just quickly go over my plan of action and then we'll get into it. So the plan of action for today's Zoom, we're going to just kind of give a beginner's masterclass. We're going to start with support and resistance drawing in multiple ways. We'll probably cover Fibonacci's. We're going to cover my magic Fibonacci, not just on NAS and US30 like I did in the YouTube video, but also on Forex pairs, and I'll show you how you do it on gold, on GBPJPY, for instance, where it's a 3-digit number, or even conventional Forex pairs. We're going to understand breakouts a little bit more by the end of the session, and we will add some indicators at the end, just so that I can really round the position for you, because although indicators are great, lots of the members seem to have a very limited understanding, and it would be good if I can give you the introduction, the true introduction to Forex, where it's like, this is what you're looking at, this is how you draw on charts, this is everything you need to know before you can start adding indicators. And then we'll go into adding indicators and we'll start playing around with how you build methods. We can look at some of the methods that we've pre-made strategies on. So for instance, the 5-minute strategy that I've been doing for GBPCAD, if I just very quickly load it. So for instance, this one, which if you've seen the GBPCAD video, you would have seen already. We'll kind of go into how this came about and various other things. We can maybe look at some other strategies and how we look at making them. Let me just remove my 3 indicators. And then at the very, very end of the session, we'll do a Q&A. Again, if you have questions you would like to put in, please put them into the questions and answers room in Discord. You can put them into the Zoom chat. I do have it open. However, it's much easier if everything is in one place. So let's begin. So the first part we are going to start with, how do people draw support and resistance? And we're going to cover it in a few different ways because there are different ways of doing it. We'll cover a more general way, and then we'll cover the way I would draw support and resistance and some of the nuances within that. So we will begin by just saying, like, how do you draw support and resistance? Well, there are 2 real ways. Lots of people either draw lines or they will draw boxes. Now, neither is inherently more incorrect or incorrect than the other. You could draw a box and that's perfectly fine. Or you could draw a line and that is also fine. The one thing I will say is when you're drawing lines, do be careful because you will have wicks go through, which on lower time frames will give you fakeouts. And that's something where a zone can be much more beneficial because you can draw your zone so that it has your wicks built in, so you can see the total size. So for instance, in this one, you can see I went to the very bottom of this wick and into the bodies, just to the edge of the bodies. And that means that I would struggle to get faked out unless it did, and I'll draw it just in the chart. So the bodies closed here and then came, which is much more unlikely than just throwing a wick and then going up. So if it threw a wick and then went up, that would be fine because you'd know about it. But if you're getting bodies closed below, then you're probably going to have issues. Right. So we'll cover briefly how I'm looking for zones. Whoops, that's still got the pen tool on. How I'm looking for zones, and then we'll look at how I find my lines. So finding a zone is very, very easy. All I look for is a level where you'll get 2 or more taps of, and I'm on the daily because, to be fair, that's the most important time frame to be looking for your zones. So we're going to come through here and we're just going to place a few zones. So we're going to grab this one as I'd already marked here, because you can see that it's come down once, it's come down twice, it's okay. And we will grab this one through here. I'm going to come from the very bodies to the very wicks. We're going to mark that because there was 3 taps there. It's more than fine. You could consider this level through here. In fact, I will draw it in just for reference. So I'm going to draw a line about here because 1 tap, 2 taps. This one tapped in, rejected, and then broke through, and then it does come through here. And you could probably even drag that out to, no, they're slightly lower. And then you've got other levels, for instance, just a small one through here would be findable. I could go through and find others, but you can see, and I hope you understand the point, that I'm just looking for points of consistent tapping. And by tapping, I literally mean like hits, rejects, and it could be tweezers almost like this, where it's like one candle up, one candle down, one candle up, one candle down, or you could end up with a little bit of consolidation in through there. Anything that's just sending, if I can just see a level that is regularly occurring, then chances are there is a zone there that can be found. Again, you would even have another zone just in through here because you've got 1 tap, 2 taps, 3 taps, 4 taps. In fact, this is almost one continuous consolidation. And again, I could even, if I just keep going back in time, you'll see more and more examples where I'm just pulling up different ones that appear. You've even got another one here, and I can keep on going almost indefinitely. Now, you have to ask yourself, how important are they? And you can answer this by, normally what I would do is just extend it out. If I can extend it out and see it gets used regularly, then it's probably an important level. If it's not getting used regularly, then it's probably not. So you can see like this one, which I just picked up off of these 3 here, does get used. You've got a little pull up, reject, go through. You've had rejection through here. You had it tap and then break through. You have other taps through here. So chances are this one's a pretty good one. If I then grab this bottom one, you can see that you've got all of these wicks. So realistically, you have almost could just draw one big zone here and go, well, there's your bottom point. And I'll cover the idea of a bottom point in a minute. And again, you can see this one and this one near enough line up identically, so that would be a good one. These ones, not so much. These ones in the middle, because you are getting lots of breakthroughs and stuff, it's not always smart to use. Now, you can use it in the short term, but because I can't extend it out, I would always doubt how strong it is of a level. And when I'm doubting how strong a level is, I often mark it in different colors. So for instance, I'll mark my super strong ones in red, and I would then mark my next level down in like a yellow or an orange or something, just so I know it's that bit weaker. So I almost have like almost like a sequence of colors of how strong they are. Now, it doesn't mean that they're going to break every time, but it just means that they're more prone to breaking. And that's simply why I mark them in a different color. As you can see, if I was to extend this one through here, you can see that it gets broken once, twice, 3, 4, 5, 6, 7, 8, 9 different times. Although it held a little bit, it isn't that good compared to something like this one that, although it was broken, it also runs through a lot longer. You've had a couple of taps, but nothing major. Once breaking, tap, twice breaking, nothing, 3 times breaking, 4. It's just a bit stronger. And again, this bottom one that just hasn't broken. So yes, you will get breaks on some of the higher ones that you find, but you'll also find that they do hold a little bit better than, I could even probably draw one through here that's just continuously breaking. Simply because you have wicks here, here, all the way through here, there, in through here and here. Now, would I encourage this sort of zone drawing? Absolutely not, because you're looking for a zone that doesn't exist at that point. Now, that's when this is when you're drawing zones. When you're drawing lines, it can be a bit different, and I'll give some examples why. So now you've seen how we draw lines and zones. Let's go into the lines. So if I get rid of all of these, when I'm drawing lines, I'm just picking up levels. So it becomes a lot rougher. I tend to pick up ends of wicks more than I pick up the body or a midway through point, just because I find it slightly better. And I will come and pick up wicks of interest. So here I've marked this one, and these short ones, and thought that will do. I've picked up this one here because you have 1, 2, 3. It does cut this one in half, and I would be almost inclined to mark a second one because this one marks this one and this one. And then coming up even further still, you can really mark a lot more things when you're doing lines, just simply because you can't be so accurate as you can with the zone. I tend to mark up more things of interest. If I was to mark, I'd probably mark something through here. I would then probably consider here, here, and I probably won't go any higher up. So you can see that I have a lot more lines than I did zones. However, everything is picking up points of interest. They're either picking up these very bottom minimum points, odd wicks here and there. You've got lots of tapping that you'll get through them. So I'm very much trying to pick up things of interest. Now, when I'm trading, if I'm trading a line to line, you have to be very, very careful and very aware of what you're doing. And the reason being is these aren't as strong. And there is no two ways about it. They just aren't as strong. Trading with zones is much better. However, you can use these as a guide. So when I'm trading, if I was to trade zone to zone, I'm looking at a much more, I'm going from one point to another, aiming for pure accuracy. When I'm trading line to line, I'm using them as a directional bias. If I see I've broken through a line going downwards, then I know I'm looking for sells. If I see I'm breaking lines upwards, then I know I'm looking towards buys. I'm using them as a guide, whereas zones I look as positional reference. Now, with trading with lines, it's literally a case of just understanding they're a guide. So for instance, we're currently breaking up and through this one. Would I just take a straight buy from, and I'm going to mark it up so you can see it more visually. Would I take a straight buy from here to the next line, for instance? No, I'd need confirmation that we are moving upwards. Now, you might get your confirmation from fundamental reasons. You might get your confirmation from indicators going green. You could get your confirmation in 10,000 ways, but you need other confirmation. Where with zone to zone, you do still need confirmation, but I feel you don't need quite as much. So with zone to zone, I would take some indicators and the break of a zone, or break and retest of a zone, and I would be probably happy. With lines, I'm looking for either extra indicators to go with it, or maybe even watching news or seeing session volume. By session volume, I'm looking physically on a 5-minute chart to look at the volume and look at the time of day. If it's, say, like the time of day it is now, I know that there isn't volume, so there just isn't going to be much movement. So I would also then consider things like the time of day if you're trading lines, because you might find that it's broken, retapped, and now it's got the volume to go because it's 2 p.m. in the afternoon or 6 a.m. in the morning or whatever time you find that pair moves. And there will be a finite time. So for instance, if you've been following the GBPCAD method that I gave in the YouTube video, you can see that on UTC -4, about 8 a.m. in the morning is when we're actively looking for our trades. And you can see that in this case, I'm just going to mark it here, but you did have this potential on the 9th, and there will be others through here, but we don't need to worry about those right now. We can look at what happened today very, very quickly. You can see that today there wasn't really much. You had a almost fake out at the top, and then it pulled down. Nothing major, just to where price essentially opened the day. It was a small move. I don't even know how big that is. If I mark it from top to bottom, it's probably only 55 pips. We could have looked at catching something. Chances are we didn't. Let's get back on track. So yeah, with lines, you're very much going to have to be more aware of fundamentals and your indicator-based analysis. just simply because they're not going to be quite as accurate as you are going to be designing. Now, there is an exception, and I'm going to get rid of this. There is one more way of drawing support and resistance, and it's a very different way. Now, you've probably all been made aware of how to draw Fibonacci retracement. You would draw from the peak to the trough. So I'm just going to draw this one. I always draw it from the last candle before it really started moving. So in this case, that would be from this one to here. If I was to zoom out, obviously I could do it from up here. That'd be fine. I probably wouldn't draw like this. So I probably wouldn't draw from this one. Reason being is it pushed, consolidated, and pulled back quite a significant amount. This one, however, if I can grab it now. This one, yes, it did push and pull back, but as a percentage, if you were to look at the percent that this has pulled back, that's like almost 50% of the move from here to here, where this one is like maybe 30%. So I always tend to find my longer positions rather than my I find my very smooth fibs, I don't find very choppy fibs where you've got big swings in there. So this would be the fib I would draw if I was looking out longer, and this would be how I would draw it if I was looking shorter. If I was just picking up the chart from fresh, I'd probably just draw this one, just simply because I would tend to ignore this little bit of chop through here, and I would draw it like this. So this is how 90% of people are going to have been taught how to draw a fib. There's nothing inherently wrong with it. However, I'm not someone who likes drawing it like this because I believe there's a better way. Now, we'll cover this better way now because the magic fib method that I gave for NAS and US30 still applies to other commodities and instruments. So I'll show you on gold first. So if we're looking at high time frames, we can do it from 1800 to 1900 or 1900 to 2000, and we would really pick out large scales of time. And I always draw it in one direction, and I'll show you my fib settings also. So on the fib settings, I've just got it set to lines and extended just to make it nice and clean to look at historically. And I have these as my settings, nothing wild, nothing radical. And you can see that in this case, because we're on the daily, the amount of volatility gold has means that it's not in there for a huge period of time at one go. But we can cover that in a second. However, when we then drop down to like the hourly and the 15-minute time, you can see that we are seeing consistent use of these levels and that they are very, very well respected as support and resistance because you do get a lot of tapping in and through and lots of rejections that occur around levels. And you can see that they are very, very well respected. There is almost no visible resistance up here. Yeah, it came up, tapped it, came up, and then just left it. So you'll find that these are very strong. They are as such based off of psychological levels, but not in a way that most people handle it. So with the Fibonacci in general, the Fibonacci is a psychological tool because it tends to natural numbers of your Fibonacci sequence. It's assuming that everyone will behave in certain ways towards certain shapes, which in general, most people wouldn't even notice. When we draw it like this, however, we're telling it that it's behaving in natural numbers towards 0 and 1 almost. So we're finding our levels that go from one heavy psychological level to the next heavy psychological level. And that's giving us all of the smaller psychological levels that will be incredibly important, but less noticed. And by less noticed, I mean that most people won't notice that we're going for them. However, due to human psychology, they will end up getting that. which is why you see how precise things come up to round numbers, because they're the major psychologicals, and then also how we can get nice consolidation and tapping through levels like this because they're more minor. Now, the next thing that I'm going to show you is how to draw it on other things. So you've just seen on gold, I would go from 100 to 200. So if I was to draw it live for the current amount of time, we go from 17 to 18, always draw from bottom to top. 1700 to 1800. And again, I draw from bottom to top. So bottom to top, and the reason being is because 786 and 236 are not exact opposites. So if I draw it consistently in one direction, then I can control the amount of variables. If I'm drawing it either direction, then you're just adding another variable into the mix that you don't need to be. Furthermore, in my historical testing of the magical fib, I've always found it better to draw it from bottom to top because of the positioning of the 236 and the 786. If I draw it the other way around, I was finding that I was just a little bit less accurate. So that's how we draw it on gold. And then I will show you how you draw it on a normal Forex pair. So normal Forex pairs, you have to be somewhat aware of their volatility. Something that's incredibly volatile, you'll need to give it a bit larger of a scope. Again, we still tend towards round numbers of 100 pips or 1,000 pips, but we wouldn't. So for instance, USDMXN, you'd probably almost look for 1,000 pip range, not 100 pip range, depending on what size your broker uses, obviously. So with GBPCAD, we are going to look from 1.2. So this is where I would end up being like 1.2 to 1.3, 1.52 to 1.53. So if I go 1.52 to 1.53, and again, GBPCAD is not a great example at the moment because of how volatile it is. It has been pushing. So you can see that since 22nd of February, you've essentially lost 2,500 pips. That's a huge amount of volatility for a pair that doesn't often see such volatility. You can see that it normally has been swinging in a much shorter range. The last time we've really seen movement like this was over here, which was in 2016. And yes, we did see just as much volatility, because you can see that in the same amount of time, you've lost about the same amount. And in double that, you've lost almost double that. But the large swings in scale are not the rule, they are exceptions to the rule. You can see that on average, we are in much tighter ranges. So in this case, you can see that my daily on the daily it's far too small, and I can show you how you can deal with that. However, if you were to be on like a 5-minute chart and you were just looking for a scalp play, I'm just going to shuffle this one down one set of notches just because I want to show it on the current price. You can see that when we're getting down to like 5-minute, you are catching this nice open, you're getting consolidation at other levels, you're then able to trade from level to level quite nicely. Now, if we're going to look at the GBPCAD still, and if we want to grab a bit more volatility of the price movement, what we can do is we can draw from 1.5 to 1.6, and I just draw it on there and type the numbers in, it's far quicker. So 1.5 to 1.6, and you'll see that they do spread out significantly. And you can catch much more of that price movement. And again, you can see how accurate we can be with wick taps up through here, even this through here, which had no real good support or resistance appearing beforehand. And again, even through here, there was no real good support or resistance beforehand until it got there. And we can draw these all in advance. So you're really able to pick out levels and go, here's going to be a good take profit later, or here is going to be a good stop loss. Obviously, if you're setting as a stop loss, you'll need to set just past it because we can see that on average we are hitting it. If you were to set this as a stop loss and be the wrong side of the line or on the line, then you're putting yourself at risk of hitting it. So you will want to be just past the line in terms of stop loss. And I'll give an example. Say, for instance, we wanted to put a short position. I'm just going to draw one up here. We're going to, and you can use the fact that things do tap the lines to your advantage. So we can set a limit order, for instance, and I'm just going to set a stop loss, but it's the wrong side of the line. And I'm setting my entry point right on the line, just so that I can try and collect the maximum amount from it, because we know that in theory it should hit the line, but it shouldn't want to go much past. You can see that we have wicked past it, but in general, we shouldn't want to be moving much past. So we can set our entry right up onto the line. Stop loss, you might want to give it a bit of breathing room. Depends how volatile that pair is. I would just probably mark it up here so it misses this wick and this wick. And then we can start looking at our targets. And for instance, you've got your own target built into the system where you're looking at the next line. You will have to do things like using indicators for confirmation, looking for very low time frames, looking for the rounding. By rounding, I can show you what I mean. So for instance, you can see here, you've been pushing up quite nicely, and then prices near enough flatlined. I consider this as rounding. Price has gone up and it's rounding the slope, ready to come down. That's what I'm considering rounding. And this is something you have to look for when you get to these levels. Now, if I get rid of this, and we're going to go and look at a few other pairs, just so that we can mark them up with our magic fibs, because the numbers on them are different and it will be worth looking at. So if we go to GBPJPY, you can see that I've already got one drawn here. I had drawn it from 161 to 162, which was a good amount of range for a reasonable amount of time. You can see again, because of the volatility of GBP, we have been pushing quite significantly. And that has led to it being a little bit small, but we can then fix that very, very simply. If it's too small in this case, I would hasten to go for 160 to 170, as that's probably about right. So 160 to 170. And again, this all depends on the time frame you're trading. If you're someone who's trading with very low time frames, you're going to find this, which is based off the 1 hour, far too big. So you might then, so if we look at this, if you're trading on like a day trader where you're entering one day, maybe entering for a couple of days at a time, then maybe this is okay for you because you're on the 1 hour chart and that's fine. If you're someone scalping, where you're running very, very low time frame charts, and we're going to go to 5 minutes so that you can see it. We're going to draw from like 166 to 167. And you can see that you are able to get enough price action in there that's viable for you. Now, again, this has been pushing up recently, but if you did need slightly more, all you would do is just go and draw from 165 to 166, for instance, and that's going to give you the next set of levels. And if you needed to draw again, you can get the next set of levels if you need them. In general, you're probably only going to need one batch at a time because you're going to get your rejection, you're going to get some things that you can play with and small little trades. This isn't for you to go and get huge 900 pip trades on, unless you're looking at those very large levels in the daily. So that's how we go about drawing our magic fibs. Is there any pairs that I want to cover? Let's quickly draw one on like USDMXN, because again, that has a very different pricing where it's 2 digits before the decimal. You can see that by the volatility, it's a lot larger. So on the sort of medium time frames, you're going to probably want to draw it from 19 to 20, 20 to 21, so on and so forth. So if I draw one from 2021, So 20 to 21. You see that this is very, very large. And again, you would then draw from 19 to 20 as well. So we'll draw a second one just to put us on reference. So 19 to 20. And you can see that we are getting still, even though this is a highly exotic pair, we still do get those nice consistent wick taps, and we can play it with them nicely. Just looking through here, there's some nice things to be had. Even this, we hadn't used this level for since 23rd of May, and yet it held perfectly for a little tap. If we wanted to scout, we sure can. Let me just get rid of these two. And this would probably be a case where we would go from 8 to 9, or from, and I'll explain, show it now. So I'm going to draw one from 19.9 to 20 probably. And this is one of those times where I very seldom trade this pair anymore. I used to trade it a lot, but I don't necessarily now. So you could probably draw it like this and catch your movement. I will draw the next couple down just to get some good reference. So the top point is 9 to 8, and I've just connected this wrong option. 19.9. You need to be 8. Flip around. And you can see that this is more than ample for the 5-minute or reasonably low time frames. Right, perfect. Now you've seen it, how I've drawn it on USDMXN, which is a 2-digit price. You've seen it on gold, which is a 4-digit price. You've seen it on GJ, which is a 3-digit price. You should be able to go and draw it on the majority of things. I will cover one more exception actually, which is oil. So if I just go US oil, for instance. Now, US oil, most people don't tend to trade it on 5-minute. If you're going to, I would probably still want to draw like 80 to 90, which you're going to find way too big, most likely, for like a 5-minute chart, but you'll catch the nice moves. And given the average spread of most accounts, most brokers give for oil, that's probably an ample amount of movement. If you happen to have a very, very tight broker, you could consider going for ones, where it's 8, so you would end up going from 87 to 88. But I just feel like the amount of movement there isn't viable, because your lines, even on a 5-minute, are far too close. And I wouldn't consider moving in increments of 5, where it's like 85 to 90, because I find that you want to be moving from these round numbers of tens or hundreds or thousands. You don't really want to be moving from like 85 to 95. It just doesn't ever work so well. So that's a quick one on drawing on oil, because it does actually make a big difference. Before I move on, does anyone in the Zoom chat have a specific pair that's priced differently that they want me to very quickly show you how I would draw a magic fib? I'll give you like 1 minute just to name the pair, and if so, then I'll go and draw it. If you have a crypto pair, it would be an interesting one to draw a magic fib for if you need it. Actually, while I'm here, we'll just draw it on a couple of crypto pairs. So with crypto, you have to be aware of the volatility, and so I'm just going to very, very quickly draw a couple of magic fibs. You can draw from 20 to 30, like you can draw in large increments. So I could draw like 20,000 to 30,000. That's perfectly fine. If you're looking at your high time frames, like the 1 hour or so, if you are dropping down in lower increments, then you can do that more than fine. You have to pretty much be aware of what you're trading. So in this case, you can go in 1,000 increments and you'll be okay. So 21, 2, and you'll be more than happy with the amount of price action that gives you. In the same way, I could go from 22 to 23 is my next one, and you can get those nice amount of movement in there. Again, it does also depend on the spread your brokers give you. So do be careful, and they'll give Ethereum because it's open. With Ethereum, for trading on the 5-minute, you'd probably just go from 16 to 17, and then 17 to 18. So 1600 to 1700. And then the next one would go from 17 to 18. 17. Like so. And that basically covers enough things that you should always know how to draw your magic fib. So I would say that the next part really of the puzzle, now that you everyone here should kind of understand how to draw support and resistance at this point. We've gone over it in terms of just basic zone to zone. We've gone over it in terms of drawing lines. And we've just gone over it in terms of drawing a magic fib. We did briefly cover the regular style Fibonacci retracement as well. So we kind of all should understand how to draw zones and levels and lines and everything in between in terms of that. Now, we will very, very quickly, now I've just cleared my screen, touch on break and retests and why they're important and the various types you're looking for. So I'm just going to draw a box on my screen. It doesn't matter what color the box is, I'm just going to be annotating. So there's 3 main types of breakthrough you're going to see, and I will go through like one, you can see this one, and these are probably the least common, because if it's going to do this, often I'll see 1, 2, 3, and then it will just fake out and come back. So this is like the least common, okay? No, I don't want that. Then we've got the next sort, which will look very, very similar, but with one key difference. So I've drawn that. You're going to see it tap the top of the zone, come down, and then break through. This is much more common, and I would say that this is maybe 30–40% stronger than the one above. When it comes to a fake out, if it does fake out, it will often either just come straight down or it will do like this. But this is very uncommon because it has then as such broken the structure. Normally, if it's doing this one, also it will do that, where it just kind of comes up, taps it, and leaves. But yeah, this one is very uncommon as a fake out pattern, just simply because at that point you've broken through with your volatility, so it wants to fly at that point. And then we will grab another box, and this is the probably the strongest zone, that like the strongest break and retest we get, and that is when you break through, you pull back, and you go. You very, very rarely get it like this. It does happen. In fact, there was an example if I could have given earlier when I drew a zone. You would have seen, I think it was on the daily where I've drawn it. Where was it? Here, I think, where there was a zone drawn right through the middle, so it taps and then breaks through. That would, as such, be an example of the one I just gave. Of this one here, where you break through, tap, and come back. But again, it's probably the most uncommon that you will find. Because if you're going to get that sort, normally it will happen either like this or most commonly like this. Sometimes you will just get it where it just taps anyway without leaving you this part here. So those are your common breakthroughs and how their rejections look like. When it comes to just clean rejection patterns, often you'll find you will have 2 structures. You'll have what we call an M or a W. Now, if I'm going to draw them, it makes logical sense. You have a W named because it looks like W, and you'd have an M because it looks like an M. Important ways to trade it. You never know it's an M or a W until the last leg. So you're only ever going to trade this leg. Because how do you know it's a W from here? You don't. It could just be a breakthrough. Or it could have just come in and moved off. Again, same with the M. How do you know that it's going to be an M from here? You don't. You only trade the last leg. Important thing to realize. So if we have a set of wicks at the end here and a set of wicks at the end here, when this move is done, if it gets to these wicks, it will probably retrace to around the 50% line. 50% line is just where they tend to go at once they're done, and you will literally see it on the chart where you'll get a W form and it just rolls back. It's quite normal because it hits that point where it was before and then just rolls back to the 50% line, and it's there or thereabouts most times. I wouldn't set my take profit as the 50% line. I probably wouldn't even take that trade at all, just simply because I'd be more interested in taking the down than the exhaustion, because you're trying to call the top or a bottom out of nowhere, and it's never a good idea in general. If we are looking for our positions, we are again only looking for the second tap or the last leg, if you want to consider it that way. There are a couple of ways of going about how you take your trade. I'm going to draw it one more time, and I'm just going to draw one of them. So I'm just drawing the M, the same applies to the W. Lots of people will try and take the trade from here and then get faked out because it will just do that instead, because they were trying to call the top. The other way of doing it is calling a trade just at the break of this, which we lovingly call a neckline. It's called the neckline because this is the neck of the position. So we would often then take this trade, which goes from here to here. And again, you might leave slightly early or something. You just take what you feel like you need. It isn't a sniper entry because sniper entries, we are aiming to catch the very peaks and the very troughs. However, it's a much safer way of doing it if you just wait for the break of that, because you know that once you've broken this, you are in a defined M. Because you're not going to make a lower low when you're in an uptrend. And I'm going to quickly reference that. So for instance, if you're in a trend, you're going to be making higher highs and higher lows. Makes logical sense, but for instance, this isn't going to extend down here. Why are you making a lower low in an uptrend? It's not going to happen. That would be dumb. If you're doing this, it's because you're starting a downtrend. So for instance, here, you're not going to get it do that and then continue, because you don't make a higher high in a downtrend. It doesn't even sound right to say. You're only going to be moving like this, where it's like a staircase down. If you think of it as a staircase, you don't go up to go down, do you? You just continue moving down smoothly. So that's kind of trends and the defining point of that. So if we go back to our M or our W, I have a tendency to just take this trade from here to here. It's probably the safest way of doing it. Sometimes I will take it from sort of here and then be risk-free by the neckline and then just ride the rest. But oftentimes I do just wait to the neckline. It makes your life easier. And I would say that the other thing to be aware of is probably my favorite pattern, actually, where you'll see a market do this. And the round, and I've drawn this section in here as a round for a very specific reason. Often when you find a market that's made a new low, it will come up, and it's that rounding point that is very, very important. As soon as you see it rounds, as soon as you've got a clear set of top wicks and you get that first candle that's going down, I'm literally entering at that first candle going down because I know that I'm looking for my breakthrough. Is it slightly early? Yes, because in theory it could just turn here. However, when I'm entering here, I'm on average okay, because I can always take this much profit if I have to. So I do tend to enter somewhat early when I get that nice rounding pattern. So as it's rounded, you're just taking that first candle that's giving you that direction again. So in this case, I would probably have my entry right here, and I would already be risk-free by the time we're getting to this previous low, ready to see if it breaks or continues. And then sometimes you can then use the small amount of profit and lever it, small amount of profit you've got running, that when you've broken this low, so say we get to here, that you can then add another position into your trade and scale in, because now you know that one, you're in the right trade, but two, you've also got X amount of profit already banked, ready to use as risk into the position. So suddenly you could, in theory, risk this whole position plus the original 1% you were going to risk. So you can have a much larger position here because you know that you're moving through it and you've already got X amount of profit banked. Or you could have this running risk-free and enter your second position just at that 1% risk, knowing that you've already got a position that's in profit and can't lose anything because its stop losses at break even or better. So that's kind of how we can approach very price action based analysis. From here on, we will go on to a little bit of indicator theory, and then we can cover the Q&A in the Discord. So if we're covering some indicator theory, there's a couple of things to be aware of. So you've got some indicators which will be on chart, some which are not on chart. Now, if I just very quickly load up a set of indicators, and I've just grabbed the set up from the GBPCAD video that we did recently, you can see that, again, 2 off the chart indicators and a couple on the chart indicators. Now, in this case, you can see that we've actually got a nice short lining up for BNB USDT right here. If I was to go to some other pairs, we'll just have a brief look and we can talk through things. So, for instance, on gold, what we've got here is we've had a nice downtrend. You did see it try and break up and through, but these indicators are still long-term bearish. So we knew that chances are the momentum is looking down. And when you're trading with indicators, it's important to add things together. It's not this indicator is saying buy, this indicator is saying sell, what do I do? It's this indicator is saying buy, this indicator is saying buy, this one is saying buy, I buy, or these two are saying buy, this one says sell, I don't trade. It's about picking your battles and building a very almost mathematical system. And then when you've done that, you can go and back test it. Now, with indicator-based methods, you want to remove as much ambiguity and interpretation as possible. So when it comes to trading, you'll find a lot of traders are very on the price action and clean chart side of things. Lots of them rely on gut feeling. Lots of them make ambiguous statements. For instance, I made one a minute ago when I said about the rounding. It's an ambiguous statement. You can't define it mathematically. When you're trading like that, there is always room for human error. When you have human error, you're losing money. Yes, on average, you might still make money, but you could make more by removing losses. And to remove losses is important. So when you're looking at indicator-based methods, it's important to remove ambiguity. So don't go, oh, I'll set my stop loss each trade based off of structure, because your view of the structure might change every time. Set your stop loss being, even if it's crude and is like, I'll set it off the high or the low of 3 candles ago. As long as you have a defined method of calculating it, it's far better than to not have a defined method. So it's very, very important to do a defined method for even simple things like setting stop loss. You want to boil the method down as much as you can to a purely mathematical state. And that's why I like trading with indicators, because everyone is an emotional human being. And trading is one of those situations which will bring out the best and the worst emotions in you. Lots of people get very trigger happy. Lots of people will get addicted. Lots of people will become very attached to their trades, or even to the point of over trading because they become attached to the money that they're winning or losing that day. Lots of people suffer with over trading where you make a small loss and then you go and try and win it back that very instant, and then you just make a bigger one because you're emotional. If you can trade mathematically and very calculated, you know your percentage of winning chances, you know what you're looking for. You just have to stick to that, and you know that on average you're okay. So when I made that GBPCAD method, which is in the YouTube video, I'll put it into the Discord if you haven't seen it. It was a process of picking the pair, picking the time, and then going and back testing it across those 3 hours of the day for a good considerable amount of history. And at the end of that, you will have data. That data will say, yes, this is profitable, or no, this is not profitable. Once you've done that, if you're winning consistently, well, there you go. You've just worked out what you're doing for the rest of your life. If you're not winning consistently, then you have two options. Either you can go and refine and adjust your method, or you can look at what was causing the lack of profitability, adjust it there specifically, and then retest it. And it's just a case of trial and retest until you get to your profitable point. Now, I'm gonna say that there's 100,000 indicators out there that you could be using. I like to think that you might use mine because I feel that I've made the best of what I can do, and over time they'll consistently be updated to the best of what I think that we'll need to tackle markets best. However, you could use anything, but you need to find your reliable method. Now, the reason that I like doing what we do is that we do offer defined methods, and you will see more of them coming out. I know that we have another one coming for an instrument called Nifty, and we have some crypto methods coming because of Bad Robot in the group. Again, there'll be 5-minute chart, very low time frame, just going and analyzing it and entering very robotically. Everything that we should be doing as traders is to remove emotion and human error. Trading with indicators helps. You will always get your people that are like, oh, I trade clean charts, it's the only way to trade. They're wrong. And if they can show you 3 years of profitability, then I'd be impressed. If they can show you their backtest results, I would be impressed. With us as indicator traders, we always know our backtest results will be because we'll have gone and tested it. Or we will always know our percentage profitability because we would have seen it in a backtest. We should always know and trust the data. There are times when you might go, so for instance, GBPCAD, the last 2 weeks I haven't traded it because I saw the price action wasn't happy for me. And that's one of those times where humans can intervene. If you're saying, I don't want to trade this because I don't like the look of it, then that's fine, because you're keeping your data within what you're looking for. So for instance, GBPCAD, the last 2 weeks I haven't traded it, but that's also fine. You don't have to trade. But if you are trading, then you know, I know my data and statistics on that pair. Now, me not trading it has helped, sure, because I would have hit some losses, but I'd also hit the same number of wins as normal. So overall, all I've done is actually just remove potential for making money. But it could have also been the defining factor of protecting money. And at the end of the day, as traders, we're all aiming to protect capital more than we are just making it. So if I'm looking at the shell USD, which is obviously gold. We're going to draw a magic fib, and we're going to combine some ideas. So you saw how I'd drawn a magic fib before, and I'd drawn it from 1700 to 1800. We saw that that was probably about right. And then we can look at the idea of when, and especially like here, here's a couple of good examples. You can see that this very candle here, your backD just gone green, and you've just broken through not only the line, but the ribbon and the indicator. So you know very, very quickly that maybe we should be looking up towards this next level. Say we start at the end of the next candle, so not even this candle, but we wait another candle. You can see that backD has already gone completely green. You can see that we've got a green cloud. You can see that our candles had gone black as per my method. Yes, in this case, logistics map had been delayed, but you might not necessarily have worked it out, but you'll find logistics map is slightly later. It can be very, very early at times, and it can remove chop because of that, but it will more than likely be slightly slower than how backD is set in this method. And it was entirely for this reason. I would always be entering based off of everything plus everything else and wait on LMI, then the LMI and not backD. It's a case of understanding what makes things tick. And this is set so low that this is reacting based off. So one of the parts of it is a 2 EMA. 2 EMAs means that it's only averaging the last 2 candles of data, where this, everything that goes into this takes a lot longer to use. So in this case, I would probably have taken my trade after the end of this candle. In theory, it does go green 2 candles later, which isn't far. And I always have my defined stop loss set as just past the outside of the teamer ribbon. It makes my life easier. How would I have set my stop loss? You take off it. I could just set it up to the next line if I really wanted, because I know eventually it'll get there. And you can see in this case, yes, it does. It did take a while, but it got there. Although I would probably find that I'm just going to bring this back. I would probably find that as I saw it kind of rounding and doing this sort of business, I would end up closing it. But that's just my personal preference for when I see rounding and like movement decreasing. You'll also find in all the indicators start going red, which is another sign that maybe it's time to leave. Now we can look at other indicators on top. So we'll also play with flip and ride and other things right now. We're just going to have a little bit of fun with them. Let's flip and ride. As a flip and ride is kind of what it is. I do tend to draw my magic fib with flip and ride actually. So I'll go 1700 to 1800. And then you'll find that with flip and ride, if you do that as the larger fib, you'll find it is probably slightly too close. What you can do as a little life hack is you take your fib and you can draw it from one line to the other. And then suddenly you can go, oh, look, this is approaching a level and is giving a sell signal. You can catch it. This is doing different things. And you can start looking at stuff like that, where you're drawing fibs from between fib lines. I prefer drawing them manually and being like, here's a 100-point fib, here's a 1,000-point fib. But with gold, it's not quite as viable. So you do end up having to do it like this, unfortunately. The other thing with flip and ride is with how Arian trades, it's very fine because he very much is just scalping the small pieces. So he'll take little buys, little sells, and it's all okay. With how he trades, and he'll have to explain it more because I don't necessarily understand what his rule set is. I just coded the indicator to what he wanted. So you have your little sells when it gets to certain conditions. You have your buys when it gets to certain conditions. Your buys are always on trend. Your bull and your bear are always on trend, whereas the faces are off trend. And there are different rules for why they do what they do. But it's important to, if you're going to use flip and ride, you have to build your method around when you're picking each one. So you need to go through and either use support and resistance or use some other means, be it an indicator, support and resistance or whatever, to selectively choose your buy and sell signals. If you're just taking them at random or just taking everyone you see, you're going to be eaten alive. Like, you need to understand which ones are which. And that's why I tend towards my multi-indicator method like this one, where it's very clear cut of, we just take trades based off of when things go red or green. As you can see, this one that on BNB USDT that happened a minute ago, which I had made the comment of, oh, we could have shorted that, would have already been going into profit and been more than happy for us. In fact, it's pushed down to this level, and now you'll probably find you'll get some resistance because it's support. But that's irrelevant. We could successfully look at it and go, oh, it'll probably move down a little bit, and it has. So now we've kind of gone over some very basics of trading. We've just briefly looked at adding some indicators, although nothing major. We'll very quickly look at some of the questions in the questions and answers. And if anyone else has any questions, please put them in the chat and I'll cover those also. So first question we had in the Discord was, is there a strategy that can end in one day? No overnight trading. And the answer is yes. Look at the GBPCAD method. Again, I'll put the link into the YouTube video once it's published, because this live will be a YouTube video. In fact, if I'm really technical, I'll mark down the time and be like, check the card right here. And no, I won't. I'm going to be real. I'm not going to do that. The next question is related to the signals we have going on. Is it wise to have repeated gold signals on a challenge when there are drawdown limits? And the answer is, you can have repeated signals. However, you've always got to be aware of your stop loss sizes because of your risk. So for instance, you need to keep an eye on your lot size, because you've got to, although you can have multiple trades, you don't want to be going over your drawdown limit because of your lot size. How to avoid a bad star in baseline overlay. So with baseline overlay, the only way you can really avoid bad stars is by having a defined method of when you're trading. So you use stars as a guide to a trend. You don't use them as a signal. You will always have some bad stars because it's very much a case of finding a happy medium. You can't have it react quickly without having it react incorrectly sometimes. So yes, I can adjust it, and I'll show you the settings you want to adjust. It goes from this box at fast period to slow range. If you adjust those 4 settings, you will change your star period, and I'll just go like this so you can see that it does change. You can see that you can change it, but you either make your stars later to the point that they become irrelevant, or you end up adding too many to make it oversensitive. So it's about finding a happy medium, and that's why you have to work out the settings that will give you signals, but maybe you get like 10% incorrect ones, or you have other indicators that say, but don't take this one. Could I show the settings to optimize baseline overlay stars? I just did. Can we have a strategy or PDF showing examples of the crash and burn strategy? Yes, I'll probably make that my next thing. Will I be posting more signals in the Forex signal section? Yes, I haven't been trading recently because markets to me just haven't looked right. But when I'm happy with how markets are moving, yes, I will call a lot more signals. Can you use the GBPCAD strategy for longer time frames? Yes, you can, and I'll show you how. So the GBPCAD strategy is designed around a 5-minute chart. And on a 5-minute chart, you're using a 15-minute teamer ribbon. Now, that's a 3 times time increment. So I'm just going to mark that as 3x. If we want to use it on a larger time frame, say we jump to an hour, then we need to take our baseline overlay and we need to make this 3 hours. And then suddenly this will now be appropriate for a larger time frame. Say you want to trade a daily chart, then you would have to add a 3-day time frame into your top bar, and then you can do it. I don't even, so for instance, if I put it on daily, it'll still look too small. If I can add 3 days, which I can. So I've now added a 3-day time frame. I can now set the 3-day time frame, and now you have this set on the daily. You see on the daily, it's incredibly smooth, and I need to get rid of the stars because they annoy me. You can see that on the daily, it's incredibly smooth to trade. You can literally take this, you could take this, you could take this, you could take this, you could take this, and just be consistently rinsing markets. However, you have to draw down and swap abilities to do that. Not many people do. There's a couple of brokers that are very good for it. AAFX used to be very good for zero swap accounts. I'm probably not going to get a link to that, but you can go and research swap-free brokers. Some of them exist. You'll find that their leverage can be often like 40 times or something, and their swaps can, their spreads can be quite large, but they'll offer zero swap accounts. Islamic accounts also often give zero swap fees, which is nice. Does anyone have any other questions? If not, then we can look at ending the call for tonight, and we will head into the next week. Do you take notes to know which time frame gives you indication to enter or about to enter a trade? So, for instance, where I often trade GBPCAD on the 5-minute, I often, let's just reset my chart. Where I often look at GBPCAD on the 5-minute, I will, so let's just say that I was looking to see if there was a buy. Oftentimes I would then look at the 3-minute and see if there's an early opportunity for a buy. So if the 3-minute is starting to say buy, then I know the 5 minutes can start saying buy soon. So say for instance that I was someone who took my trades on the 2 or 4 hour chart, for instance. If the 1 hour chart is starting to say buy or sell, then I can already start looking at the 4 hour waiting for that signal. So it can give you that slight heads up that something's going to come soon. I don't know if that helps. Does anyone else have any other questions? If not, then we should end it here, and I will go and upload this video. All right, perfect. So I will say thank you very much. Good night, good morning, whatever time of the day it is for you where you're watching this, and I will see you next time.